All right, folks, I want to talk to you about the market today. And again, I hate to say I told you so, but I saw this coming miles away. S&P huffed and puffed last week. Economic data was strong. And now everybody's waiting for this Wednesday's Fed data. We're going to have the Fed committee meeting. We're going to see whether the Fed is going to keep rates steady or not. And here's my take on all of this. As far as I'm concerned, the Fed has, and this is what you guys need to understand. We're dealing with a Fed that likes to tell us everything long ahead of time. I mean, this Fed likes to give us prognosis 9 months in advance. And they're going to tell us the economy's moving along well. Employment data, which came out on Friday, is putting unemployment at above a 50-year low. So there's absolutely no reason to do anything. If anything, the Fed can increase rates slightly, but obviously they're not going to do that in light of what's going on with China. But as I predicted over the last few days, we're going to see a congestion pattern. Typically, 2-3 days before Fed data comes out, markets become congested. If you look at the small caps, they already look like they're heading into the lows. There's really no catalyst to cause the market to go higher. The Fed is probably going to tell us we're going to lower rates if China and U.S. don't work out the trade war or if economy begins slowing things down. But the market has already assimilated that. As a matter of fact, if you look at interest rates, let me show you the bonds. Fed lowered rates 3 times, right? That means, remember, bonds and interest rates, they're inverse of one another. Bonds go down, interest rates go up. Interest rates go up, bonds go down. Bonds go down, interest rates go up. They do the opposite. Well, what did the Fed do? They lowered interest rate. That means bonds should be going up, right? They're not. They're going down. Bonds are not reacting. That means interest rates are going higher or interest rate futures are going higher even though Fed is lowering rates. The bottom line is interest rates are near all-time lows and they're not going to get much lower. And the market is pricing that in. And that's why you saw a higher high right here. Let me take this a little further. You saw bonds pricing in the first rate hike, but then afterwards, second rate hike drop, they go lower. Drop, not rate hike. Fed announces a rate drop. We go from here up to here. We have this nice little swing. And then after that, we've been just going lower the last several months. Fed lowers rates and interest rates go lower. So interest rates are going lower means bonds are going higher. So the Fed is not going to come to the rescue and rescue this market. It's just not going to happen. But we do have retail data on Friday. And if retail data is better than expected, that can give us a nice little upside momentum. Also, on the 15th, we're supposed to have a resolution between U.S. and China. Phase 1 of trade war should be completed. I don't think it's going to happen. Most investors and traders are sitting on the sidelines and waiting for that. The interesting thing is this. If it's not going to happen, the odds are we're going to find out about it over the next 3 or 4 days. If it is going to happen, we're not going to find out about it. So no news is good news, but ultimately, I'm expecting this market to congest. And if you are going to keep your eye on one sector, I suggest you keep it on the Russell 2000 because that has a lot more China built into its price action than anything else. Right now, I'm expecting the Russell to go from the 162.50 level down to about the 157 level. It'll create a congestion pattern where the stocks just go up and down. So expect a symmetrical or a triangle or a wedge or some type of a congestion pattern. Usually it's a flag, a triangle, or either a symmetrical or an ascending or descending triangle. Usually a flag or a triangle is what we get, or maybe a wedge, which is when you combine a triangle with a flag, you get a wedge. So again, any type of a symmetrical or a descending or possibly ascending pattern, the way I'm looking at it right now, it's probably going to be a symmetrical or descending. There's no catalyst for the stock market right now. If China gets resolved, the majority of it is already priced into the small caps, but I do believe we're going to see a rally develop because small caps are going to begin pricing in more upside because they have a lot more speculative elements in them. Now, the only 2 sectors that I'm really putting money under right now is the 5G sector. Now, there's a couple of funds. This is a 5G fund, ticker symbol FIVG, 5G. This is an ETF that tracks the 5G segment. And here's another one, NXTG. So we got NXTG and FIVG. Those are the two sectors that follow the 5G sector. 5G sector is going to be the biggest sector of 2020. And I'm going to give you, there's a report below, you're going to get access to a bunch of my coolest 5G momentum stocks. I mean, the top ones. If you want to go with the overall 5G market, these two ETFs, NXTG and FIVG, will get you moving in the right direction. But if you really want to outperform the ETFs and outperform the market, stay tuned and I'll give you my best 5G stocks. But overall this week, just not expecting a lot, expecting congestion and consolidation, and expecting more upside, but not quite yet. The only sector that I'm really looking to break out and just make higher highs and surprise earnings is the 5G network, and that's the one you want to watch right now. Hope that helps. Folks, given that markets are at record highs, there's only a handful buy and hold investments that I expect to deliver massive returns over the next few months. Quite frankly, most stocks are overbought, but some of these opportunities are related to the 5G technology sector, which will spark a technological revolution and create a massive amount of wealth for savvy investors like you. And some of the stocks are just now starting to take off. And that's because the massive investment in 5G are showing up as massive earnings beat for a select few sectors. One company I recently told Breakout Report members about has beat earnings 12 quarters in a row and is up 60% in just a few months. Folks, 60%. Can you imagine that? That's just the beginning. I think this company has the potential to deliver quadruple-digit gains. I'm not kidding. Click the link below to get the name. I'm making this information virtually free. Don't miss out. Follow the link now and learn all about this stock.